One morning in early April, the old farmer stepped onto his porch and froze. Nearly 70 acres of low ground were underwater. Young wheat disappeared beneath muddy water even though there had been no heavy rain the night before. He followed the flow and saw that it was coming from the property next door, where the bank had recently built an earthen levee around its logistics project. The levee had forced the water off its natural path and pushed it straight across fields his family had farmed for more than 40 years. The bank had bought hundreds of acres in the area for a $68 million logistics center. But the old farmer's land sat directly between the natural drainage route and the road leading into the project. After he refused several offers to sell, the bank began warning him that his property would keep losing value if it continued to flood. Looking across his flooded fields, he realized those warnings no longer sounded like advice. They sounded like pressure meant to force him to sell. The farmer was 72 years old. He lived with his granddaughter in an old wooden house and still used a tractor more than 50 years old that his father had left him. But the farm still carried a $42,000 loan with the same bank that wanted to buy his land. As the water rose day after day, his neighbors worried that one ruined season could leave him unable to make his payments. If that happened, the bank could take through foreclosure what it had failed to buy through negotiation. Within 2 weeks, water covered nearly half the farm. Young wheat began to rot, fences were knocked down, and the livestock had to be moved to higher ground. While the farmer and his granddaughter were building a temporary shelter for the animals, the bank sent him a payment reminder. At the same time, it offered to buy the entire farm for nearly 30% below market value. The bank called it a way to protect him from further risk. The old farmer saw it differently. To him, the bank was using the flood itself to pressure him into selling his land for less than it was worth. A few days later, a bank representative came to the farm and told him directly that one more failed season could lead to foreclosure. The old farmer did not argue. He stood beside the fence, watched the water moving across his field, and said the water was going the wrong way. The representative did not understand. The farmer only said the bank would understand soon enough, because this land had been here far longer than any of their new blueprints. The only person who believed him was an older farmer from the neighboring property, a man who had lived in the area since childhood. He remembered that before modern levees were built, the land where the bank was now building had been part of a natural flood channel. Water from the north used to cross the low ground and drain into a creek to the south. If that route was blocked, the water would not simply disappear. It would find another way. The two men decided to search for old records. They went into an old storage building and found a metal box filled with land maps, drainage records, and survey documents from the 1950s. Inside was a faded color map showing an old water channel beginning on the land now owned by the bank, running beneath the farmer's fields and connecting to the creek in the south. The lines were worn, but still clear enough to follow. The farmer realized that the records his father had saved might explain the entire flood. He compared the old map with the new construction site and saw something important. The bank's levee had been built almost directly over the entrance to the old drainage channel. Once that outlet was blocked, the water did not disappear. It was forced down into an underground layer of sand, moved beneath the surface, and then rose back up through the farmer's fields. That explained why water was appearing in places that did not match the slope of the land. To the old farmer, it was strong evidence that the flooding was no accident. 3 days later, the bank held a meeting with county officials, project engineers, and nearby landowners to prove that its construction had not caused the flooding. The engineers brought modern drainage models, charts, and detailed plans. The branch manager openly claimed that the old farmer was only looking for an excuse to delay paying his loan. Everyone in the room turned toward him. He did not argue back. He simply opened the metal box, pulled out the old map, and placed it beside the bank's technical documents. A few people laughed when they saw a map more than 70 years old sitting next to modern computer models. The bank manager asked sarcastically whether an old piece of paper was supposed to be more reliable than hundreds of thousands of dollars in engineering studies. The old farmer stayed calm. He did not argue. He kept the map on the table and looked toward the engineers. In a room filled with screens, charts, and numbers, that old document had just raised one question the bank could not yet answer. The old farmer did not argue with the people laughing in the room. He simply placed his finger on a faded curve on the map and asked the bank engineer how deep they had drilled during their soil tests. The room quickly went quiet. The engineer said the test holes went less than 5 feet deep because the upper soil layers appeared stable enough. The old farmer nodded and said the ancient sand channel was deeper than that, and surveyors more than 70 years ago had clearly marked where it was. County officials were not ready to make a decision based on one old map, but what the farmer showed them was enough to raise serious questions. They agreed to send an independent inspection team to the farm. The decision frustrated the bank, but the pressure did not stop. While the farmer waited for the inspection, bank representatives kept reminding him that every day the water remained on his fields, the farm lost more value. They pushed him to sign the sale agreement as soon as possible, as if the investigation no longer mattered. The next morning, the old farmer started his tractor, which was more than 50 years old, and drove straight into the flooded fields. He was not looking for the deepest water. He was looking for places where water seemed to be rising from below. Every few dozen yards, he stopped the tractor, pushed a long steel rod deep into the soft ground, and pulled it back out. At several locations, the end of the rod came up covered in light-colored sand, completely different from the heavy clay that normally covered the field. He marked every spot and kept moving farther into the flooded area. A bank engineer followed him and watched. At first, the engineer said the sand had probably been carried there by surface water after the fields flooded. The old farmer did not argue. He chose one of the marked spots and dug deeper into the soil. Within minutes, cold water began seeping upward from the bottom of the hole, even though the water around them was almost still. The flow became stronger and easier to see. The engineer bent down to examine it, then said nothing. This did not look like surface water moving across a field. When the independent inspection team arrived, they drilled at 3 different locations based on the farmer's marked points. All 3 tests showed the same thing. About 8 feet below the field was a thick layer of water-carrying sand that formed a continuous underground path. The engineers compared its direction with the old map and found that it led straight toward the bank's new levee. The structure built to protect the $68 million project was sitting directly across an underground drainage route. A preliminary report was sent to county officials soon afterward. It found that the new levee was increasing underground water pressure, forcing water through the sand layer and pushing it up into the low fields. If the problem continued, not only the old farmer's land but also nearby properties could remain flooded much longer than normal. But the most serious warning came at the end of the report. If the underground pressure kept rising, it could weaken the soil and threaten the stability of the western foundation of the bank's own project. County officials did not wait. They immediately ordered all construction on the western side of the project to stop until a new hydrology study could be completed. Excavators shut down, trucks left the site, and workers were forced to stop. The bank manager protested fiercely because every day the $68 million project sat idle meant tens of thousands of dollars in extra costs. Only a few weeks earlier, the bank had warned the old farmer that the flood would cost him money. Now that same water was costing the bank money every single day. Still refusing to accept responsibility, the bank blamed the weather and argued that there was no direct proof that the levee was the only cause of the flooding. The old farmer listened and made a simple offer. If the bank truly believed the levee had nothing to do with the problem, they should open a section of it at the exact location of the old drainage channel shown on the map. If the water did not go down, he would admit he was wrong. His proposal moved the argument away from charts and computer models and toward a test everyone could see with their own eyes. After several days of arguments, county officials ordered the contractor to dig a test trench through the lowest section of the levee. The excavator cut through layer after layer of soil, but at first almost nothing happened. Bank representatives began saying the test had proved them right. Then, less than 20 minutes later, the sand below began to darken. Water suddenly pushed up from underground, grew stronger, and burst through the opening. The people standing nearby quickly stepped back as the water found its own path through the levee. Within a short time, the small flow became a clear stream, moving straight toward the natural creek to the south, exactly along the route shown on the map, drawn more than 70 years earlier. Water continued draining through the new opening all night. By the next morning, the water level on the old farmer's fields had dropped by more than a foot. Over the following days, it kept falling quickly, revealing broken fences, thick mud, and rows of damaged wheat. The old map that had once made people laugh had shown exactly where the water needed to go, but the falling water only opened the door to a much bigger problem. The investigation later found that the bank had actually been warned about the risk of changing the natural drainage route before the levee was built. A consulting engineer had sent a report clearly warning that blocking the low ground could change underground water pressure and cause flooding on nearby properties. But changing the design would have delayed the project for months and added major costs. The bank chose to move forward anyway. Once that document appeared, the case was no longer just about an engineering mistake. The old farmer immediately hired a lawyer and sued the bank. The lawsuit demanded payment for the lost crops, damaged fences, land restoration, and the extra costs of moving the livestock to higher ground. But his lawyer made an even more serious claim. The bank had pressured the farmer to sell after its own construction project had caused the flooding. Because the remaining $42,000 loan was also held by the same bank, the lawyer asked the court to investigate whether the bank had tried to use the damage to push the farmer into a position where he could no longer make his payments. During the trial, the bank was ordered to turn over a large number of internal project emails. One message quickly silenced the courtroom. In it, a project executive had written that if the farm flooded for one more season, the owner might have no choice but to sell. The message had been written during the same period when the bank was trying to buy the farmer's land to make room for the project. The judge immediately ordered a wider investigation into the entire land buying process, from the warnings that the property would lose value to the offer that had been nearly 30% below market price. The final ruling hit the bank hard. The court ordered it to pay for all damage caused by the flood, cover the cost of restoring the drainage system, and completely erase the farmer's remaining $42,000 loan. The $68 million project was also banned from moving forward under its original design. The bank had to rebuild the levee, reopen the historic drainage route, and prove that the new system would not keep pushing water toward the surrounding fields. The land the bank had once tried to force the farmer to sell had now become the reason the entire project had to be redesigned. But winning in court could not immediately return the farm to the way it had been before. After the water was gone, the old farmer saw that about 18 acres of the lowest ground had changed badly. The soil held water longer, the surface had been disturbed, and planting wheat there again would take a great deal of work with no guarantee of a good return. Instead of filling the low ground and forcing it back into farmland, he remembered stories his father had told him about natural depressions that used to hold water during certain seasons. He began to wonder if he had been trying to fight the land instead of understanding it. A conservation specialist was invited to inspect the 18-acre area. After several visits, the specialist found that the land sat directly along a migration route used by several kinds of water birds and could naturally become a seasonal wetland. Instead of treating the water as something that had to be removed completely, the specialist suggested keeping part of the low ground as a place to hold water and provide wildlife habitat. A state conservation program later offered the farmer yearly payments if he agreed to maintain the area for water storage, soil protection, and habitat for migrating birds. That change slowly made the farm more financially stable in a way the old farmer had never expected. Along with the yearly conservation payments, he could lease seasonal hunting rights in areas where it was allowed, while continuing to farm the higher ground as usual. Together, these sources of income meant the farm no longer depended on a single crop every year. The irony was clear. The same low ground the bank had once used as proof that the farm was becoming worthless had become an asset that produced steady income and helped the farmer avoid going back to the bank for loans whenever a growing season went badly. A few years later, The logistics center was finally completed, but it no longer looked like the original design. The bank had to leave a wide corridor through the property to protect the ancient water route it had once tried to block. The new drainage system was built so water could continue flowing toward the creek to the south instead of being pushed back into nearby fields. Even more important, the old map that had once been laughed at during the meeting was added by county officials to the required reference records for major construction projects that could affect drainage in the area. The young engineer who had once laughed when the farmer placed the faded map on the table later returned to the farm. He admitted that their biggest mistake had not been their equipment, software, or modern water models. Their mistake was believing that if something did not appear on a new map, it no longer existed. The underground sand channel was still there. The water still followed its old path, and the history of the land did not disappear just because someone built something new on top of it. The old farmer did not win because he knew more engineering than the bank. He won because he understood the land he had lived on for decades. Many years later, the tractor that was more than 50 years old still sat in the barn beside the old wooden house, facing the 18-acre seasonal wetland. Every spring, water returned to that low ground, but now it was no longer a sign that the farm was about to be taken by the bank. Water birds stopped there, grass grew along the edges, and the water continued moving along its natural path. The old farmer still worked the higher fields, while the low ground produced income in a different way. What had once been seen as the farm's greatest weakness had become one of its greatest strengths, simply because the person who understood the land best never accepted that the water was there for no reason.